All right, welcome to my first market live stream. We got a lot to talk about. Bitcoin sell-off is worsening. Broadcom reported first Q2 2026 earnings. Meta is also considering charge a customer $199 per month for Hatch. It's a one of the consumer AI agent, and our Apple is also kind of deviating from the smart glasses roadmap. The schedule is full, really excited, and let's get right in with the first one, which is talk a little bit about Bitcoin. And right now, that is do a sell off right now. Bitcoin tank 63,000 for the first time since February. As sell off kind of continues and deepens. So if you look at the kind of the price trajectory of the Bitcoins real quick, it last time it was at this level. Let's see, Bitcoin right here. Last time, let me go to 5 year mark. So last time it was at this level, it was at 2024. Before that, it was around like 2024 mark, but before that was 2021. So 2 years ago, it was exactly at $63,000. So this kind of caused by the MicroStrategy also sold some Bitcoin, and MicroStrategy, if you know, is currently sitting at about $11 billion losses and kind of holding Bitcoin. So Bitcoin is a very volatile asset. If you hold it and you know what you are doing and you can stomach, that'll be fine because that's a huge drop from almost 125 to 60, 50% drop. So anybody else who is holding Bitcoin, leave in the comment and let me know. But next up, we gotta look at um, Broadcom. So Broadcom reported earnings, and the stock didn't really do that well. So let's dig in. Why did Broadcom not do so well? So if you look at some of the numbers real quick, so Broadcom reported strong Q2 2026 results with revenue of $22.19 billion, slightly above the estimate, up 48% year over year. So that's pretty great. Like 48% is growing very, very fast. Adjusted EPS of $2.44, beating expectation and rising 54%. Semiconductor Solutions revenue came in at 15 billion, up 79%, while semiconductor revenue surged 143% year over year to $10.8 billion. That it came below like the buy side expectation. For Q3, Broadcom guided revenue to roughly 29.4 billion, ahead of consensus, but slightly below buy-side expectation, with AI semiconductor revenue expected to reach about $16 billion. The company also delivered $10.26 billion and free cash flow equals to 46% of the revenue, which is very high cash generating machine. As said, the growth is driven by accelerating AI demand, custom AI accelerator, and AI networking, and strong operating leverage. But if you look at Broadcom right now, the stock is not where it needs to be. So if you look at Broadcom, so let's look at Broadcom right now in the stock. 24-hour drop 15%, which is a pretty massive drop after the earning went from 479 to 407. So why did it drop? Because um, disappointing AI chip revenue forecast. So the market did not like the forecast kind of Broadcom was giving. And the another funny thing is, if you look at the earning call, CEO had a bit of a oopsie when the seeding part of the report from last year. So let's look at Broadcom earning. So if you look at the earning call, it's pretty funny because uh, you can tell like the CEO and the person that did it was also a bit sweating because it was like, oh no, I messed up. Let me restart. All right, so here is the let's listen to it together right now. Can I pin in the name real quick? Let me see if I can find it another way. But I don't think I can find. I need to put in the name for this. Don't want to right now, but you can listen to it later on. And it is a pretty uh, funny song because it's a $2 billion company, and you don't expect them to mess up, right? But they still kind of messed up. Um, Next up, we are going to talk a little bit about Meta and what they are planning to do with what we're planning to do with their kind of the new AI agent. So let's look at Meta real quick. Let me pull this up. So here is Meta. So $200 a month for a plan. Um, Plan Hatch AI agent. So what exactly does it do? So $200 is a pretty steep price. If you ask me, that's a lot of money. So hopefully it'll provide very good, um, kind of return if you want to sign up for it. So the Plan Consumer AI agent, according to the information patches, described as a consumer version of OpenClaw, it let users create software tools and automate tasks with plain language prompts, including scheduling events, sending emails, and building simple apps, and generating travel itineraries. Meta is also considering a premium hatch tier, which will be offer 5 to 10 times more data usage capacity than the free version. During development, Hatch has used Anthropic cloud model, but it expects to run on Meta's Muse Spark model at launch. So this is very interesting. So this is a consumer AI agent, right? That Meta plan to charge users that much money, $200 a month. I don't know if people really sign up for it that much, because $200 a month is very steep. But if you think of it, kind of like your own personal assistant right here, or you can ask the agent to crawl around the web page, look for something, or sending out an email. I don't think it takes that hard. Like it also take a bit of enjoyment away from looking, browsing and stuff. I think a good deal. So if your AI agent can do that for you, does it take away some of the happiness? That's kind of like what I'm saying right now. So we'll see how that performs later on in the year. Hopefully, I don't know how that. I don't really know if this is a great idea. In my opinion, kind of $200 a month. If it's a bit cheaper, I feel like it could perform a bit better because price point is a kind of an entry point for everybody. Almost, I would say, it's a blocker for everybody. But next up, I would like to talk a bit about Iran, not the country, the company Iran that is. So look at some of the details. Iran just signed a transmission connection agreement for 800 MW's data center campus in Budi, South Australia. The site includes four 300 kilowatt volt feeder exits, following its support up to 800 MW without requiring network upgrade and energizing expected to begin in 2028. The project marks Iran's first announced Australian data center campus, and it will provide submarine fiber connectivity to key APAC markets, including Singapore, Indonesia, South Korea, and Japan. So another AI is campus is building in South Australia, like pretty much single day. You're getting kind of like a new AI data center from everywhere, and there's uh, of the protests against it because people just don't really like AI set data centers because if you think about it, right, AI centers, if you put it in a location, the electricity gonna the grid gonna be need to be upgraded. So who's paying the cost? Like the grid companies don't really pass down the kind of the bill to the AI data centers builders. They pass it to consumers to upgrade the grid in order to meet the capacity of the data centers. So a lot of people just don't really like kind of AI data centers. Next up, we got Apple smart glasses. So Apple smart glasses, as you do, you guys, if you guys remember, that Apple released kind of the XR virtual reality headsets. I don't think it went anywhere. So they might have pivoted a bit. So let's look at some of the details. So Apple smart glasses roadmap has been changed, right? So according to supply chain analyst Min Ching Kuo, right here, Apple display equipped AR XR glasses, which are expected to use optical waveguide technology, have reportedly been pushed back to 2029. Meanwhile, Apple display less AI glasses similar to Ray-Ban glasses are still expected to ship 2027. Cool says that the Apple is shifting resources away from Vision Pro line and towards smart glasses that have broader mass market appeal. So the AI, the one that when it came out, everybody was wearing it. It's just completely, I feel like it just completely died down so far because nobody's really paying attention to it at all. I just feel like it's just not intuitive enough, or just the price of it might be a bit too big. I mean, like if you, I'm glad like Apple is focusing on a new kind of product line, which is the glasses, because everybody is pretty much going in after it, like the middle glasses, which is very popular. I've seen it in many different kind of YouTube videos and stuff, and it's just very easy to record. So I'm glad like Apple is focusing on that. I feel like if Apple like releases smart glasses, I might also buy it because I'm wearing glasses right now. There's a lot of people that wear prescription glasses, and if it's intuitive enough where I can just ask AI or record a video or listen to music, why not? Because right now these glasses already costing me like $300 when I get smart glasses, right? Like that's kind of like what I think. If it's something is dramatically better, why not? Pay for something that could help your life a little bit more than what you were used to. But next up, we're gonna talk about Google. Uh, Google Google is planned to use roughly 30 billion of its 80 billion equity raise to cover tax obligations to title Improved Equity Award. According to the information, that will represent nearly 40% of the raise. So if you remember, Google raised 80 billion equity for kind of the AI centers, and they used 30 billion of it, which is a lot of money because they hire so much talent to cover all the AI and the development. And Google is not slowing down anytime soon with the AI development. They don't want to be left behind. So next up, we got CrowdStrike, and they have reported earnings. The earnings look pretty good to me. But, let's look into some of the earnings of CrowdStrike real quick. Let's maybe just open the. Okay, so CrowdStrike is a company that deal with CrowdStrike right there. So the earning, this is okay. They are 10 after reported earnings, which is pretty bad. But if you look at the numbers, I don't think it's that bad. So Q1 2027 result revenue of 1.39 billion, up 26% year over year. Adjusted EPS of $1.10, both slightly ahead of expectation. Annual run rate reached 5.51 billion, up 24% year over year, while net new annual run rate grew to 32% to 255.8 million. CrowdStrike also announced a 4-to-1 stock split with the record date set for June 25th, 2026, and split adjusted trading expected to begin around July 2nd, 2026. For 4 years, the company got a revenue of 5.91 to 5.95, a annual run rate to roughly 6.53 to 6.56, and adjusted EPS to 4.88 and 4.96, while raising its new annual run rate growth outlook to 27.7% at the midpoint. Management said that CrowdStrike is becoming critical AI security infrastructure, highlight regular net new ARR, strong model adoption, and AI-driven security product as sign of AI inflection point. So it felt 11 point post earning, kind of just mixed market reaction and geopolitical kind of tension. So the company, like, I feel like the earning wasn't that bad. I don't know. I don't think it validated this almost 10 point drop. If you look at it here, it did 4-year guidance, raised its 4-year guidance right to 5.59. I don't know why this is not working at all, but 5 right here, 59. So mixed market sentiment. So U.S. equity so mixed signals because yesterday, if you remember, the whole stock that's dropped down. The Q1 result, they reported 27.8 million in net income and adjusted $1. So it's great that it's also kind of having a net income um, kind of earnings. If it's not negative, if it's still burning cash because of the AI investment, I think it's a kind of like might be a big trouble maker for me. So I'm glad that it's already positive. So overall, I feel like it was just a great earning overall. But since it reported yesterday and the whole broad market, if you look at the S&P, everybody dropped. So that's kind of the reason that the market sentiment nothing to do with AI and kind of CrowdStrike, and it's kind of what it was trying to do accomplish, because the earning look, in my opinion, looks great. Um, Next up, I would like to talk a little bit about SpaceX. SpaceX plan to set IPO price at 100. Allow ads. Let me just turn off this right here. Pause in this site. Okay, so let's get into SpaceX. They are plan to report. I never paid for any of this, and this is why I did. Let's use a different one. So SpaceX IPO plan to sell about 556.5 million shares at $135. At this price, the company will value at nearly $1.775 trillion, making it one of the largest IPOs in the history. Right, $1.75 billion. You cannot kind of just imagine how big it is. And I remember, if you remember Elon Musk, a lot of people say Elon Musk will be the first trillionaire. Like, think about this, like his biggest conglomerate, like the SpaceX and Tesla, two of the biggest companies that he's running, can really make him one of the biggest world first trillionaire, since he owns just so much of SpaceX stock, and he's like one of the majority owners of it too. So leave in the comment section below, do you plan to buy SpaceX stocks? And also, one of the fun news that just got in this morning, that SoFi is apparently also able to trade, start kind of buying stocks for SpaceX. So let me look at right here. Okay, so sorry, it's the great kind of news and contributors. SoFi user can now submit the case of interest for SpaceX IPOs here. SoFi is one of the handful brokers listed in SpaceX filings to allocate IPO shares. All right, and so also Robinhood is also one of the retail investors where you can get some of the stocks. And this, let's look at the new website for SpaceX. Looks very, very clean. Wow. Love the animation going on. But I do think, in my opinion, they over exaggerated in their kind of market, kind of up TAM, total addressable market. It was like astronomical, around like trillions of dollars. 75 trillion last time. I don't exactly remember how much it is. It was way more, almost same as the GDP of a country, United States. So let's look at the official website right here. Building the infrastructure of the future. It's a bit laggy, but now it's pretty good. So here is the brokerage account that will get IPO. Wow. Wow, look at that. That look remind me of a squid. You know, squid when they have babies, they just pump it out. Just like that. Pumping out Starlink. 150 total launches. So 95%. Connectivity business. 10.3 million Starlink subscribers. FAQ. This is amazing. Love it. Love it. Love it so far. Creating a website that educate the user on like this. Kind of the how kind of educate the user on upcoming plans. Let's look at US data center. So it's on the news a lot, and US data center is has a bit of a bad name on itself, but I don't think it's gonna slow down anytime soon. So US data center constructions spending surged 28% in April to a record annualized rate of $50 billion. So there's many constructions that is going on right now, and US data center construction. If you look at this right here, so one of the bigger players, yes, Google, and also SpaceX. They building data centers all over the place. Like I live in Missouri, and they're also building a data center. Arkansas also getting a data center. Pretty much everybody else is getting a data center, if you like it or not. So annually, they are spending about $50 billion, and it's surpassing public transportation construction spending of $49.9 billion for the first time in history. So since 2022, data center construction spending has exploded 357%, compared with just 16% growth in government transportation spending. As a result, data center now represent 2.3 of all US construction spending, highlighting how AI data infrastructure demand is reshaping the construction economy. So, it's not just the data centers that is getting the boom. The construction companies are also getting the boom. Imagine, like, a couple years ago, everybody was just building roads, but now the welders, right, are building data centers. Also, they're gonna be filthy rich because a couple of back and maybe 3 years ago, data center was construction cost was 10 billion. Now it's 50 billion. So it just continue to drive up growth 20%. I don't think it's gonna slow down anytime soon. Since data centers, you need more and more, and even Elon Musk is also in this kind of in this kind of boat where he wants data centers in space. That's crazy, like in space, because it's just so much easier to build data centers. So we'll see. Leave in the comment section below like what you think about the data centers coming in. But now it's definitely booming. But not everybody agrees that AI is, data center is booming and is not a bubble. Well, one of the great investors, Ray Dalio, think differently about data centers and AI. So Ray Dalio says Ray Dalio says that the AI has the ingredient of a classic technology bubble, right? And arguing that major technology shifts often create bubble because it is impossible for investors and companies to perfectly predict. So he is one kind of investors that understand a lot about kind of he has so much experience in the game. He lived through the bubble, so he's warning everybody that AI is look like a bubble, kind of like the dot-com bubble. He says that companies face a difficult choice to spend aggressively to capture market share or risk underspending and falling behind. Dario added that bubble eventually prick when the investor company needs to sell wealth or asset to raise cash, turning kind of excitement and enthusiasm into forced selling pressure. So he's warning that you know AI, the way we are spending, is gonna eventually gonna catch up. It's like a big balloon. Eventually, it's just gonna pop. Like when it pop, I don't know who's gonna stop it, right? So I think like he might have like a bit of a kind of justification to that thinking because people overspend. Some companies that is not even making money, they just continue to spend money, and you never know. Like when if the uh, funding stops, that means all the companies that is not profitable gonna die. Like kind of back in the early days when I feel like it was a pet company that went IPO or something in the dot-com bubble and it bust real quick. A pet company created a website and now it's a technology company. Next, I like to look at some of the earning report for GameStop. So GameStop earning, and it was pretty interesting. Let me pull this up. All right, so it's the earnings are very good. Why is it very good? It's not because they are selling a lot of games. It's because they are selling cars, connectable cars. So if you look at the first quarter report, GameStop reported $348 million in sales for the connectable business, out earning every other category, hardware and software, and accounting for 42% of the company overall quarterly revenue. A year earlier, hardware was biggest contributor of 47% of sales, and now and connectable was make up 29%. So now from 29% to 42%. So if you look at like usually when I look at like GameStop, I think of like the games and stuff. Never thought connectables is one of the biggest kind of drivers turning it around. This car, look at that, it's very expensive, $520. It's look at the connectable, it's growing massive amount, 64%. Fueled by car sale, high revenue, and improved margin, parallel GameStop to highest, propel GameStop to highest Q1 operating income ever at $143 million. Retailers learned that Pokemon card lasting popularity, launching power packs last year. Recently, GameStop opened up a higher tier option for customers to spend up to $5,000 to rip a digital pack that contains a random PSA graded card worth per company site $5,000 on average. So they're really capitalizing on GameStop on the Pokemons because if you remember, Logan Paul also sold one of his Charizard. It was worth millions of dollars. Let me pull this up real quick about Logan Paul and his selling his Pokemon card. Let's revisit that one more time. Pokemon card. So, oh no, it's not. It's not. Forgot it was not Charizard. $10 million was a diamond necklace. It is Pikachu card right here. That's just insane. It's just a Pokemon card. He purchased it for 5.27, and now 6.16 million. Yeah, so it's a
It's over. It's over. 60,492,000. Are you ready, bro?
he's the first one.
Oh my gosh. Feels good, baby.
He just has so much
Cheers.
energy.
Let's go. Round of applause, y'all.
I wonder what he do. Something like something that he just so much money he can just waste on the money. It's almost like a Picasso art or one of the famous painters, and they're connecting it like even though it's machine made. Think Keep in mind it's not handmade. It's machine made. It's not like painting, but the rare Pokemon illustrated card, one of just 39 created for a Pokemon illustration contest in the late 90s, won under the hammer on Golden Adults on Monday. Wait a minute. Maybe it is like handmade. Let's dig into it. So is it handmade? Handmade. Okay, it's printed by Pokemon Company, and it was okay. So it was. Oh, it was rare because it's not sold commercially. So only 39 copies were made, and Logan Paul have one of them, and now it's becoming one of the biggest kind of Pokemon card, most expensive one ever. But yeah, that is the end of the video. Hope you guys enjoy the live stream. If you did, don't forget to give this video a big thumbs up. Make sure to hit that subscribe button. My name is Kelvin, and I'll see you guys next one.